Well, I mean, I think that one of the things that we should say, just for those people who are examining our gray swan factor, that at this point we have that red flag up, but the we don't have it. We're still doing the research on the extent to which that should be a factor in the gray swan event factor. And one of the reasons why this all came up in the beginning was that we were doing research on our gray swan factors basically by country of origin, and found out that the Chinese companies had a very low gray swan factor, and that was one of the precipitating events for us to go back and say, wait a second, that should not be the case. And so when we went back to that, we figured, oh my goodness, we have to update our gray swan factor. Now I should also note that that requires a bit of research, but in the meantime we have the flag up. It's not fully integrated into the gray swan factor, although we would put it as a star next to it, saying, this needs to be changed. Yeah, there we go, John. You got China excluding Taiwan, 161 count, minus 1.23%. That's the third item from the top, the gray swan event factor, and it's lower than the United States, Canada, Europe, and other foreign, and the only thing that's lower than that is the Pacific and the tax haven, which is, so we have basically the three riskiest places on the planet that the company originated having the lowest gray swan factor. And our response to that is to look at it and say, well, that raises questions about whether or not flags are being reported on.
I think, if I can just speak to that, we can only, the gray swan factor, certainly it's ongoing research and we're aware of this, so we will want to account for the risk of these other areas, foreign investments. At the moment, it's based on the data we have available, and the reality is foreign companies do not have much lower regulatory requirements, and so we have much less data from an auditing and regulatory point of view on which to base the factor. So now this first sort of estimate of the gray swan factor was based on the information we had, and this whole discussion is about what the information we don't have. And so quantifying the blind spot is the difficult task that we're now going to add to. So if you're comparing apples to apples, if you compare China to China, well, that's all a huge blind spot. Now anyone listening to this podcast knows, but you compare within each group, it's comparable, but you're dealing with big blind spots of far less regulatory oversight and far less data for us to evaluate for the gray swan factor. So we're trying to quantify the missing information is sort of the tricky part. So knowing what you know is one thing, figuring out what you don't know and what it means is the next step that we're going through, but that's much trickier to do. Anyway, but we will we'll certainly update this as soon as we have some reasonable estimate of what the real risks are. In the terms of Luckin, though, just to point out, I mean, it's only what, a year and a half, was it, John, from IPO to a complete crash?
No, less than that. It was less than that. That's the crazy thing, is that they IPO'd in May, and in February, let me show you.
So from less than a year.
2019, less than a year later.
So the risk of it,
it's all over.
I mean, so you're looking at, I was looking at the drop yesterday. It's a 75% loss just that one day of trading, and it's nearly 98% off the peak. I don't know what it's off the IPO price, but in less than a year. And so there are not that many Chinese companies traded on the New York Stock Exchange, and so to have one of them blow up in less than a year, you're looking at tremendous amounts of risk here for these investments.
I was talking before about why it was brilliant. One of the other brilliant things about it, and I don't mean brilliant in a positive way, I just mean brilliant in an intellectual way, kind of a playing.
Clever,
is that it can be argued here that the audit opinion, E.Y. Yao Ming's audit opinion in February and May of 2019 was fair, and that they never issue another audit opinion. They don't issue another audit opinion, it's gone.
I would point out that EY Huaming was brought in early 2019, and they did not actually perform the audits of 17 and 18. What they did was they verified, or they signed off on some other audit firm's work for 17 and 18. And of course, they can't go back and test the inventory or the costs, or they can't go out back and measure all the things that occurred during that time. They're just working with the numbers on the page. So
that's true, John. And that therefore any claim against EY Yaoming would in fact go back and look at those auditors, those 2 years of audits, if they could get access to the audit work papers of the previous auditor. That would go back then, and you'd be looking at those to see whether or not they're valid or whether or not they're inflated. But the point is that at the moment, assuming that when they redid the audit and they signed their opinion on it, they became the owners of it. Yeah. But the interesting thing was that less than, it's like 9 months later, 10 months later, whatever it is, before any audit's done, before any audit work is done, we have the crash which occurs, and then EY Yaoming comes in, I guess, to do some sort of investigation into the fraud. Now, what's so striking to me is the initial investigation pointed the finger at the COO. Of all the bizarre people to point the finger at was some sort of a massive fraud like this, where basically everything is fraudulent, and you blame it on the COO. So one of my challenges, one of my issues with respect to the report done by EY Yaoming is just simply that they seemingly sign off on this idea that the COO is the guy. Now, we know from the last couple of months that, in fact, as the Western regulators and investors have not accepted that as a premise or as a conclusion, we've now had the CEO be arrested, and we are, I guess, either expecting the chairman to be arrested at some point.
He was arrested. Yeah, Lou was arrested.
He was arrested. Well, that's because it seems to me that somebody has to take the fall for this, because the potential disaster for the Chinese not being able to have access to Western capital is what's at risk here. And there is nobody that the CCP will not sacrifice. Yeah. If they were promised that they weren't going to get sacrificed, that doesn't really mean very much when it comes to the overall protection of the CCP. Now,
we'll see what happens after this. I mean, after it's all truly over, that's when you'd have to know whether or not they were ever serious. But I think I want to wrap up this discussion because we're gone a bit long. But I want to just bring it back full circle. That opinion you're talking about, Mark, with the COO is sort of fingered as the guy. It's hard not to see the potential influence of Communist Party members in that decision. Potential Communist Party members who may have been paid off by Lou or associated with Lou or had benefited from him, and he wanted the potential damage from this to be limited to this scapegoat, the COO. And it's hard not to see that something like that might not be going on. Influence people, party members who are present both in the company or influenced by the company and present in the audit firms, saying or doing things that just really aren't quite up to snuff. It just really aren't that believable because of influence going on. And I think that brings us back to the original point of they're not subject to inspections, to objective inspections. And there's a lot of risk of undue influence by the Communist Party or Communist Party members on audits, on companies. And so I think that's just a huge potential risk that people need to remember when they're putting their money in their exchange traded funds.
You mean the fiduciaries, the fiduciary advisors, and I mean, this kind of comes back to full circle in the sense of, obviously we think that the new standard, there's a new standard that, that we're in the process of establishing for for that fiduciary level advisory due diligence. And that is to be able to look at this information that goes to the question of the reliability of the financials. We don't, one of the things that not doing is we're not telling you that Alibaba isn't a great potential investor in terms of growth opportunity, et cetera, with all of whatever it is they sell. What we're saying is that you can't know. You may not be able to know how good an opportunity it is. How do you know? Like with Luckin, how would you know? You just assume the reporting is true. And is it slightly off? Is it understated? Is it overstated? Who knows what the point is that this red flag is a significant one. It's not a nothing burger. And so, yes, I think that this is one of the things that we're trying to do with this, with our red flag, green flag, and gray swan event factor reports. And is it fair to say that we would encourage anyone to reach out to, I guess, you, John, initially, if they have questions about this, and hopefully you won't have too many CCP members reaching out to you.
So as long as you don't visit me, I'm fine. Anyway, all right.
I don't know where you live.
On that note, yes, I live in Idaho, in the mountains. On that note, I will let's stop there. Thanks, guys. Appreciate it.
Thanks, John.
Thanks, John.
See you guys.